what is deductible to you as a business owner? Because I think that's what a lot of people miss out on. They miss out on a lot of expense deductions because they're not sure what they can actually deduct and what is deductible, and what is deductible to one person may not be deductible to another. So like I used to work with a lot of fitness professionals, for example, and I used to joke because during COVID, I was like, damn, fitness professionals, y'all get to deduct your kettlebells that you have in your home gym. I can't. Like, you can deduct that. Why? Because it makes sense for somebody to, if they're a fitness professional and they teach fitness, to buy fitness equipment for their business. Whereas a CPA, I'm always like, why do you need a kettlebell to do taxes? So it's a little bit weird and it doesn't make sense. So the criteria are ordinary and necessary, and that wouldn't fit like an ordinary test. So basically you have to look at, well, is this something that other people in my industry would invest in, or is this something that will further or benefit my business? If so, it's
Welcome to the Legalpreneur Podcast. I'm your host, Andrea Sager, founder and CEO of Legalpreneur Inc. As a serial entrepreneur and someone that works exclusively with small business owners legally protecting their business, I'm dedicated to covering common legal issues faced by business owners, providing you with the business knowledge you need to catapult your business's growth, and showing you just how some of the world's most elite entrepreneurs have handled these legal and business issues themselves. In true attorney fashion, the information in this episode is not legal advice. This is for informational purposes only, and you should always consult with your attorney before implementing any of the information in the show.
Hello there, welcome back. I am so excited. Number one, it's tax season. I know most people are not excited about tax season, but I'm excited. I know my guest today is excited because she is going to be chatting all things taxes and financials. So Shannon Weinstein, thank you so much for joining me today. Thank you so much for having me on. I love tax season, unlike most of the population, but it's an exciting time of year. Yeah. And you know what? I mentioned it. So we have the Legalpreneur book that is officially out now. And for those, if you have read it, if you haven't read it, you need to go get it and read it. But what I mention in the book is that I actually do love tax season because it's a game. Like, it's just a game of like who can bend the rules the most or who can get around the most without getting into trouble. And so I love tax season. So Shannon, before we get into all the good nitty gritty about what we can and cannot do as a business owner, tell us your story. How did you get to where you are today? Which, by the way, you all, she is currently in Costa Rica. She lives in Costa Rica like half the time. So yeah, she has a story. That's why I love tax season, because I get to be in Costa Rica for it. So my story starts with the fact that I lost a bet with my dad and became an accountant, as most accountant origin stories do. Most accountant origin stories are based on someone telling them they should do this, or I feel like nobody wants to be an accountant. It's a really kind of funny thing. But you also studied accounting, right? So it's this thing where like you just, somebody influences you. Yeah. Yeah. It's funny. So I really quickly, I don't know who influenced me, but I really just think it has to do with numbers and money that influenced me. Yeah, for me, well, my dad basically, ever since I was in kindergarten, he was like, you want to be an accountant when you grow up? And I'm like, no, because I didn't know what that was. And I wanted to just say no to whatever my dad wanted, because I was like, no, whatever you want must be boring. And he's like, I'm a CPA. And I would go into his office and I'm like, this sucks. I get paper cuts. I don't like this. So basically there was this class in my high school, which is, now such a blessing, right? Class in my high school that was accounting. And he was like, Shannon, you have to take one of these for your requirements. We think you should take accounting. Like, take this for one semester. If you hate it, I will never ask you again. If you want to become an accountant, I'll never ask you again. And I was like, ooh, high stakes. I like this. So, and I'm very competitive and very much like a gambler with him. So I loved winning bets with him. So I was like, okay, you're on, but what? And he's like, but if you love it, you have to major in it. And I was like, easy. I'm not going to love this. I'm going to hate it. This is going to suck. 2 weeks later, I was bumped into honors accounting with the seniors, had 102 average. And I was like, this is easy. And my dad pulled me aside and he's like, listen, if you understand this stuff, you are 17 years old. If you understand this stuff, this is, and by the way, I wanted to be a Spanish teacher, fun fact. And I was minoring, or I minored in Spanish. I've been studying it since I was in 7th grade. And what I didn't realize was I really wanted to be a teacher. That's all I really wanted. I wanted to be a teacher, but I didn't want to make crap money. So I was like, well, is there a way I can teach and still make money? And my dad was like, this is how you can do that. Like ever since I was 17, I swear. So like half my life ago, it was so important that he really got that message through to me that you can use this as the language that you speak, because this is a very rare language you speak, Shan. So that's how it really all started.
That's awesome. And okay, so tell everybody your background in accounting, like what's your journey been like there?
So graduated with a degree in accounting, passed my CPA. I worked in the Big Four firm for 6 or 7 years. Million stories in that alone.
Wow, that's a long time to last in Big Four. I'm telling you, Shannon, I was like dead set on working at a Big Four. I was like, I'm going to work at a Big Four. I'm going to work my way up to partner. Like, that's going to be my life. I'm going to be married to my job.
Yeah. And I was. But then we had a falling out. No. So what ended up happening was it actually took my father's passing in 2013 for me to realize what was going on. So it turns out I had a 5 days bereavement leave, and I was traveling at the time. I went from auditing to consulting, and I was in consulting. I was traveling 8 months a year, 4 to 5 days a week. And it was miserable because even though I was traveling and platinum status and all the fun stuff, like I wanted to go home, especially after my dad passed. I was like, I don't want to be alone in a hotel room working all day. I really want to go home. And they said, well, there's nothing for you to do in Boston because all your jobs are in Atlanta, Winston-Salem, New York, wherever I was going. And they said, we can't let you stay home. And then I had 5 days bereavement leave. And on my bereavement leave, my senior manager called me in the middle of the night, really. It was like 9 p.m. with a stupid question. And I was like, okay, we're done here. We're absolutely done here. Because when you work in accounting, you're dedicated. All these people have a real heart of service. A lot of your accounting professionals do. And then when the light switches on that, like, oh my God, I'm pouring so much into this career, into this job, and I'm not getting this back. And I'm sure you felt the same way. That resonates with you with Big Law, because it's the same type of thing. It's like, I'm pouring in for this career, and I'm like, for what? Because that was a really like eye-opening moment. So I left. I worked at a few other corporate jobs. Long story short, I ended up starting my own practice in 2019 and quit my job just over a year ago completely. And I'm now in full time. So I'm really excited about having a fractional CFO practice now.
I love it. And tell me, I'm just really curious, when you transitioned from auditing to consulting, what were you consulting on?
Yeah, that's a great question. So like systems implementation. So actually my secret specialty, even though I have those 3 letters at the end of my name, which everyone thinks, oh great, you can do taxes. My actual specialty is in process improvement and system implementation. So we look at where processes might be, could be optimized, like could be more efficient. We looked at their financial systems, with their accounting systems. And then I also did research in accounting policy for audit teams. So I did a lot of technical accounting too. So it was really fun, actually, to problem solve all day, every day. And every day was different. Every day brought a whole new challenge. And the rate at which you learn in those environments is just, you can't replace that. So I wouldn't trade a single day I spent at that firm for anything.
Yeah. No, I love that. And so explain who you work with today and how.
So mostly in my CFO practice, my CFO service, I work with entrepreneurs, usually over the $750,000 revenue level. And what we do is we make sure you can turn your data into decisions. So what we're trying to focus on is strategy, not just on the tax front. We do that as well, but we also do financial strategy. Like, are you growing, scaling? What's your compensation structure look like? What, when should you be hiring, and who should that be? What is your return on ad spend? How much should you be spending on advertising, et cetera, et cetera? All these questions that come up for business owners, we help them answer with the data, with the actual raw facts, so that they don't have to play this guessing game or this gamble as much when they have somebody who's like, hey, this is what I think you should do. And it's kind of that seat at the table, in your board of directors from the financial side.
Yeah, I love that. And how are you finding your clients today?
So there's always quickly, because I know you and your story, because you've transitioned since you started your business. You didn't start serving these clients. So I think, or start with this outsourced CFO, right? You didn't start with that.
Yeah.
So can you explain how you kind of transitioned? I like the transition and how you, basically, I want everybody to see what you're doing right now may not be what you're always doing, and that's okay.
Yeah. Oh yeah. So this is the 2022, 2023 version. The 2019 version was cheap bookkeeping and tax prep, which I like lovingly refer to now as the hoe phase. When I was doing anything for money, I was like, can you do my taxes? Yeah. Can you do this? Yeah. I was all about the yeses. And I think we all have to be in our first year, because it's the yeses that teach you when the no's should have happened.
Yeah, exactly.
And then you exercise the no muscle. So there was a lot of yesing happening. And then I realized like, oh, I don't have a really close knit connection with my clients because they only want to see me once a year. Like they're not interested in seeing me more than once a year, even though that is the better thing to do. And I know you preach that too. Like you should be meeting with your accountant year round, but nobody even took my invitations. Like I would invite them to meet year round and they didn't want to. So I was like, I think we have a transactional relationship, meaning I think they pay me to do taxes. I do taxes. And I didn't want that. I wanted more of the actual real relationship with a business owner. I wanted to make sure we were on the same page, that I felt like an advisor, a trusted person, someone they had in their corner that they could call. And then I also realized I can't do that for 100 people. So I actually let go this year of 80 clients. And that was 80% of my clients. And I said, I'm sorry, I'm no longer offering tax prep services. I love you all very dearly, but I need to evolve my business and what it offers in order to have the type of business that I want. And I'll tell you, doing that gracefully was everything, because no client left like pissed off or mad at me. I made sure they had good homes. I found other tax pros that were like me and I recommended them. I wanted to make sure they were all taken care of. So I think that if you want to have that evolution, you can absolutely do that, but you just have to be really mindful about what does that mean for them and how can I make that an easier transition so I leave with a really good impression, because you never know if those people are going to become your next client in that next level. So
yes. Okay, I love this story. I love your transition, your whole story, because that's basically like what we've done with the law firm to legalpreneur. So a lot of similarities. So for those that are listening, they're like, okay, I really just want to hear the good tax advice. What does Shannon have for me?
Well, first of all, check out Keep What You Earn, because I do that every day. 5 days a week. We're on the podcast about like 15-minute episodes, bite-sized pieces, just like what Andrea does, but like with the money side. And but tax strategy is my jam. It's so much fun to save entrepreneurs money in taxes and to kind of break that stigma that like tax strategy is cheating the game, but it's actually just playing by the rules and being mindful of the rules.
Yeah. So what are now, I think for most entrepreneurs and a lot of those listening, they know, hey, I ideally should be an LLC taxed as an S Corp. Now, beyond that, what are like some tidbits, some nuggets that a lot of people probably don't know about?
Yeah, so let's start off with one thing. An S Corp isn't a one-size-fits-all. So there are things you have to keep in mind for an S Corp. Like you have to have good bookkeeping. You have to be up to date on your taxes. Like there are requirements to get the S election. So that's another thing that I think a lot of the TikToks that have 30 seconds to explain this don't really unpack the fine print. And that's where we come in and we go, actually, this may not be a good idea for you just yet, because the savings won't outweigh the cost for you to comply. And that's a really tricky thing. So I think one overarching theme is like, don't take advice at face value. Know that there's a custom way of delivering it for you and that it's not good for everybody. It's just kind of like diet advice, like, or allergies and things like that you don't take into account. So just keep that in mind. But the biggest things I love is like, especially once you have the S election, that's where we have a lot of fun, because now we can do things like we have the Augusta rule, we have the accountable plan, we have like hiring your kids. And if all that sounded like Chinese, I'll explain. So the Augusta rule is where you can actually rent out your home to your business for up to 14 days a year. And the kicker is at market rate of rent. So like not just what not for the same cost as your mortgage interest or anything like that, or the actual cost. It's going to be based on what you think it's worth, if you can prove anyway, in the market. So like Andrea, you live in Houston, right? Or near Houston. If the Astros are winning the World Series or playing in the World Series, guess what? That's probably a great weekend for you to rent out your house to your business because I bet the rate of rent is pretty high to stay in Houston. So you can be strategic about the time of year. You can be strategic about, the location of the property and how you use it. And it's a lot of fun because it can be a huge tax savings while also not, it's just tax-free cash flow from the business to the owner. So there's really no income claimed by the owner, but it's a business expense. So it's a great mix of strategy.
And I've used the Augusta rule. And this year I'm not, so I don't have my own home. I live with my parents now, but I am, I'm just like rambling now, but I just started looking at houses again and I'm like, yeah, don't know if I'm ready to make the leap again, but we'll see. But I love the Augusta rule because, and is it just your house or is it also, is it just the house for the Augusta rule?
It's your principal residence you own, and I believe also a vacation home.
Yeah. I don't have a vacation home yet. We're getting there though.
So for example, I did a few days for this house in Costa Rica for a mastermind event because what I did was I had it playing on the TV, the big TV in the living room. And I said, okay, we're going to have a safe space here, quiet, and be able to focus. And I was able to rent out my living room basically to my business for a few days to attend trainings and things. So it doesn't always have to be something crazy, throw some big party. You can have a board meeting in your house. And yes, even if it's you as the owner, you can have a board meeting in your house. The key though to any strategy is documentation. I can't emphasize that enough, that you have to have good, solid documentation. You can't just take it out of thin air and go, well, I did Augusta. You have to have a rental agreement. You have to take meeting notes if you had a meeting. You have to be able to prove that what you said happened actually happened.
Now, what else besides the Augusta rule? Because you said all the fun happens once you're an S Corp. What else you got?
Accountable plan was my second one. That is where you can actually reimburse yourself. So if you have a home office, which is a space that is principal place of business, used exclusively for business, those are kind of the criteria, right? So if it's exclusively used for business. So right now I'm in a guest bedroom. And my exclusively used for business space is really the corner I'm sitting in with this desk. It's not going to be the bunk bed next to me or the closet behind me. It's not going to include those things. So whatever is only used for business, you can take that as a percentage of your home. And then all those expenses, it's so cool. All the expenses to own or maintain your home or rent, get a proportion of those based on that, business square feet divided by total square feet. Based on that, you can reimburse to yourself the cost of the business to occupy your home. So that's actually your mortgage interest or rent. That's your security, landscaping, cleaning, utilities, Wi-Fi. Anything, repairs, maintenance. You want to get your windows all done? Guess what? Business can pay for a portion of that. So it's a really cool way to take advantage of a good strategy there when you're not actually spending any extra money, but you can realize some tax savings from that.
Yeah. No, that's what I remember being really good savings. The accountable plan.
Mm-hmm.
What else you got?
And then hiring your kids if you have kids. So, are your kids legalpreneur employees?
So they haven't been because basically going from the transition and then this past year was just not a good revenue year. Or 2022 wasn't a good revenue year, but for 2023, yes.
Yeah. So what you can do is you can hire your kids, and you have to pay attention to state laws on this one. But what you can do is pay them up to, I believe, we just started 2023 and I haven't memorized all my numbers yet, but I think it's $13,850.
Oh, it went up.
It went up. Yeah, inflation. Don't quote me on that. It's either 13.8 or 13.9. I want to say it's 13,850. You can Google it, standard deduction 2023. You'll find it. ChatGPT will tell you. Yeah. No, so you'll be able to deduct up to about 14 grand, up to that amount. And you can pay them that if they make no other source of money. So if they're working at McDonald's part-time and they're teenagers, you got to be careful because it's up to that amount of money for the whole year they can earn. So it's not just from you. So you have to make sure that they're not earning any other income. But up to that amount is the standard deduction, which is already I call your head start on your taxes. So that's the first chunk of income that's not income. So you won't be taxed on it. And the beauty of that, this is my favorite strategy for many reasons. One of which is you get to teach your kids about money. They get to become actual employees. The second thing is that you can actually set aside. So when you pay that like 13 grand, let's say, and by the way, the 13 grand is based on like, is it really worth 13 grand, whatever they did? Like if they brought you juice boxes every other day.
Minor models.
There you go.
That's
they can be models.
They're too young to do anything else. Like they're 3 and 5 and about to be 4 and 6. God, I cannot. My kids are about to be 4 and 6. But
yeah,
they are models. And honestly, so I actually am very intentional about incorporating them into like TikTok videos or putting them on Instagram. That way, if it is ever audited, like, no, look, like they actually are models. They are creators in this business. And this is like, here's the proof. Like there's literally proof right there.
Exactly. But you pay them according to whatever kid model would get paid. So you have to make sure that it's in line with what's normal and expected. If you're paying them 13 grand for one photo shoot, I'm like, okay, like that could get scrutinized, right? It has to make sense. So there's that piece of it. And then the cool thing is you can take that money. And my favorite part of this is you can take that money and you can put it towards their retirement. So the kicker is like if you put it into like a Roth IRA, for example, it's not taxed on the way in because there's no taxable income, but it's also not taxed on the way out and it grows tax free. So they can actually become millionaires by the time they graduate college, and you could be setting that aside just based on the work they did when they were kids. And that's huge. That's like, next level wealth building. I love that.
Yeah. So this is not exactly an accounting question, but more of an investment question, just to hear your perspective. So I did start the kids last year an UTMA account, which is, for those listening, it's basically a minor, an investment account, a brokerage investment account for minors. And because I don't want a 529 plan. Well, I saw that they just changed the ruling.
They're going to. Yeah.
So for those listening, the 529 is a savings account for your kids for that to be used for college. It's a tax advantaged account. But if you don't use it for college, you're penalized. And that's why I didn't want to open them a 529 account because I'm not going to force my kids to go to college. If they want to go, they can. But they literally just announced that they're going to change it like within the past couple of weeks. But anyways, my question is, would you advise like once I am actually paying them as employees, do you advise that to go into like, is the Roth the best option as far as like tax savings, tax advantages?
It depends. It truly depends because it would be, if you look at the facts, right? The Roth means you're taxed on the way in, and traditional is you're taxed on the way out, generally. So if you look at it, Roth, you kind of think, well, it would probably make more sense for me to tax it on the way in when they're kids because they don't have any other income. They're in the lowest income bracket. They're making no money. Yeah. So my bet would be $1 taxed now is better than $1 taxed when they're 65. Probably. I can't give investment advice. That's out of scope of practice for me. I'm not a financial advisor, disclaimer, etc. Right? But like just looking at the facts, I'm like, theoretically, yeah, the Roth kind of makes sense versus a traditional would mean it's tax deductible now, but you'll have to be taking it out, and having taxes taken out of it later. But what you can do is what's called a Roth conversion at a later date. So nothing is really off the table. You can kind of my whole thing is saving is better than not saving. So do whatever is comfortable for you and talk to your financial advisor on which one makes the most sense. But, you can't really go wrong with either option because you can always do a conversion or you can open a second account.
Yeah, I love that. All right, enough about kids and paying them. What else do you have? Any other good tidbits that listeners should be aware of?
Those are some of my best weapons in the arsenal. The other ones I would say is mostly just mastering what is deductible to you as a business owner, because I think that's what a lot of people miss out on. They miss out on a lot of expense deductions because they're not sure what they can actually deduct and what is deductible, and what is deductible to one person may not be deductible to another. So like I used to work with a lot of fitness professionals, for example, and I used to joke because during COVID, I was like, damn, fitness professionals, y'all get to deduct your kettlebells that you have in your home gym. I can't. Like, you can deduct that. Why? Because it makes sense for somebody to, if they're a fitness professional and they teach fitness, to buy fitness equipment for their business. Whereas a CPA, I'm always like, why do you need a kettlebell to do taxes? So it's a little bit weird and it doesn't make sense. So the criteria are ordinary and necessary, and that wouldn't fit like an ordinary test. So basically you have to look at, well, is this something that other people in my industry would invest in? Or is this something that will further or benefit my business? If so, it's probably deductible. And a lot of people miss out on things like trainings, coaches, courses, masterminds, hell, the Legalpreneur membership, my services, everything. Like they're all deductions too.
Yeah, all that is deductible. Yeah.
Yeah. And by deductible, we don't mean you get a rebate. We're not talking like the Schitt's Creek scene. Like you don't get it. The IRS doesn't pay for your furniture, doesn't pay for your stuff, like doesn't pay for your vehicle. That's my favorite. Like you can deduct these things, but you still have to pay the bills for them. Like if you're going to spend $100 to save 20, it doesn't make sense if you are not already going to spend that $100. So it's not really a savings. It's kind of like in Black Friday, it's going, well, I wasn't going to buy this anyway, but it's 20% off. And I'm like, so you're going to pay 80% instead of 0. So you have to make sure it's something you really want and benefits you before you commit to buying something just because it's deductible. Because people get caught up in the tax savings side of it and they go, yeah, but you're still paying for the thing and you're still going to have a gain when you sell it. And it doesn't really, and the business insurance on vehicles is insane. So I'm like, let's just, think about that before we jump the gun and go buy a G-Wagon.
Oh my gosh. Okay, so for those listening that aren't quite to the point where they need an outsourced CFO, they're not quite to that $750,000 a year, what can they do?
Well, my recommendation is like layering. So the first like level 1 financial support you need is a bookkeeper, period, point blank period. And I'm not talking about DIY. I'm not talking about your spreadsheet. I'm talking about like get a QuickBooks account and get a bookkeeper who identifies as a bookkeeper. Like I say that because there's a lot of people out there identifying, like saying, oh yeah, I can do everything. And I can also do your books too. And I'm like, cool. Would you go see a doctor who's going to do surgery on you that was like, yeah, I dabble in heart surgery? And it's like, no, I want the person who has heart surgeon written on their lapel. Like, I want that person, because it is that serious, because the bookkeeper actually has the most financial control in your business because they set the direction of how everything is categorized and how it looks to an outside eye. So if you're applying for a loan or if you're doing your taxes or you're doing strategies, like the bookkeeping is the base for all of that. So you want to make sure that that's all really tight. So you want to find a really good bookkeeper, and then somebody who can do your taxes, very simply can prepare the taxes. But then once you're profitable, like I would say more than $40,000, $50,000 profitable, you really want to have somebody who can look at the strategy of your taxes and say, I want to be more of a tax advisor to you. And that's when I would recommend kind of upgrading into a specialist, somebody who considers themselves a tax strategist or tax advisor. And then from there, go into the CFO world once you feel like you are trying to scale and grow and multiply your income, not just save more money in taxes.
I love that. I love the layering of that because it's never, and that's exactly what I tell people for the legal side. It's like, look, there's all these things that eventually need to get done, but start small and then layer, build on top of it.
Yeah, you don't need it all on day one, but you want to position yourself to build that up and to layer it so that you're not skipping a step, because then it all falls over.
Oh, yeah. And I know that you have a course. Can you tell us about that?
Yeah. So if you're just starting out and you're like, shoot, I don't need the CFO stuff yet, but this sounds cool. I want to make sure I'm setting up my business correctly. I follow Andrea. She tells me I need an LLC, but like, what do I do after that? That's where you plug in my course, which is called the Business Financial Quick Starter. lovingly referred to as BFQ. I like saying it that way, BFQ. And we take you through. So the cool part about this is it's not like a typical course. It's maximum, I think 90 minutes of me talking, maximum. And it's like 7 modules. But you go through and it's step by step, like your first few months in business, the order of stuff you should do. So when you go, it's like, okay, first, what type of legal structure do you want? What type of tax structure do you want? Those aren't the same thing. Whoa. Number one. Then it goes into set up your bank account, get your EIN, set up your bank account, set up a payment system. Let's look at your bookkeeping and then let's talk about your taxes. So it's kind of like it's that layering again of let's just break it down into step 1, 2, 3, 4, 5, because I realize that business owners who are just starting out, they're overwhelmed as hell trying to figure out okay, I have this laundry list of things that Andrea and Shannon have told me to do, but where do I start? What do I do first? And this helps answer that.
Perfect. I love that. That's amazing.
Yeah.
Well, Shannon, this has been incredible. I know everybody listening is like, oh my gosh, this was the most helpful episode ever. If you have never listened to Shannon's episodes, her podcast, go listen. It is Keep What You Earn, and definitely check out her course. I know it has so many amazing things in the course, and it's exactly what you need to make sure that not only are you legally properly set up, but all your financials are in order, which can quickly become a shit show if you're not careful.
Yeah, that's very true. It costs more to clean it up, for sure.
Oh my gosh. Yeah, same thing with the legal stuff. It just costs more to clean it up. So, Shannon, tell everybody where else they can find you if they just want to follow along on social. What's your website?
Yeah, so you can find me, honestly, the best place to find me is the podcast because I'm there every single day. It's Keep What You Earn. We're on Apple, Spotify, Google, and now Amazon Music. And now my company is called Fitnancial Solutions. You can find me at fitnancialsolutions.com. And my Instagram handle is at Shannon K. Weinstein, trying to make accounting fun and just so less unsexy than it seems to be.
I love it. Shannon, thank you so much.
Thank you.
Here at Legalpreneur, we're committed to providing a supportive legal community for all business owners. I know how scary the legal stuff can be. If you found this information helpful, I would be so grateful if you could share it with a fellow business owner. And quite frankly, it doesn't cost anything to rate, review, or subscribe to the show. Your support helps me reach more listeners, which allows me to support more business owners in their entrepreneurial journey. Have any questions or comments about the show? Feel free to drop me a line on Instagram. I promise I read all of the messages and comments. And if you want to be a guest on the show or know someone that would make a great guest, simply fill out our application form and a team member will reach out if we think it's a good fit. I'll see you in the next episode.